Yeah, I think in general, we can take a different look at this and say that most of the companies, including big pharma as well as mid-sized companies such as Shire, are going to depend more and more on new technologies and technology opportunities from smaller startup companies. Because if you look at the total investment from the government, as well as from the VC communities, the total investment for the early part of the R&D value chain, the research and early development, are a lot more from the government and the VC sector than the total pharma company investment combined. And therefore, there's this tremendous opportunity, for the upstream part of the R&D value chain to develop those new technologies. And once they're developed, they will be acquired, and there will be absolute return of investment for those who can actually produce those molecules. So we, for one, have a strategy where our internal pipeline would contribute more than about 50% of our future portfolio, and we depend very much on the output from smaller companies that will be invested by either the VC sector or by the government, and that the government does play a role in that particular part. And I don't know how would you position it from the commercial side or from the research side, but the government funding to promote technology transfer from academia to startup biotech companies, and to provide that kind of regulation to allow it to happen in a particular country, I think will go a long way in helping build up the technology centers in those countries.
What's important on the legal and regulatory side?
I think if I just pick up on Mr. Su, and you've mentioned about small companies and the relationship with large companies, and in particular how they're funded. So you mentioned whether they were government-backed or venture-backed, private sector-backed. And sort of coming at it from a legal point of view, which was your question, I think if small biotechs are going to be supported by private money, and so we're talking venture mostly, a little private equity, but venture, then I think looking at the jurisdiction in which that venture finance is available is actually going to drive where we'll see expansion of these small companies. So I can certainly see that a jurisdiction that has got educated venture firms, in other words, they know the sector and have an appetite to invest in a sector that has got a risk profile worse than none, I would probably say, I think is going to be important in where we'll see these clusters actually building themselves up. So I think if you look at the R&D tax credits and other tax incentives and other government incentives, grant availability or whatever, as one driver, but I think from another driver will be where a company is based in terms of attracting finance. And I just drew a little picture as we were talking here about, I think there's a difference between where a company is headquartered and where it may be able to take advantage of government schemes like R&D tax credits, and where it can raise its finance, to where actually operationally it conducts, if it is that mature, it has actually operations in other jurisdictions. In terms then of other legal constraints, then we're mostly talking intellectual property and the regulatory arena. And mostly now, each jurisdiction will have a defensible system for saying, if you create intellectual property in this jurisdiction, you can protect it. But intellectual property and where you're based again, doesn't always marry up. And any biotech company that has got a strategy to become a global player, if you like, before it gets acquired on an M&A transaction, if it has got that strategy, then it will be filing patents in all the major territories. So I don't think intellectual property really and the differences between the intellectual property systems in different jurisdictions are real constraints, because this is a global industry in where actually if a drug does get to market, it then is protected. And I think in the regulatory arena as well, I think mostly in Europe and in the States, we're looking at, I'm afraid, ever more difficult regulations to actually jump over to progress through the drug development pipeline into the market. And I think any jurisdiction that does have a regulatory system that's easy to use, I'm not saying that you should lower the standards, but is easy to use, then I think that will give an advantage in terms of where you may decide to first of all market your drug, which jurisdictions you'll go for outside, obviously, Europe and the States.
So essentially what you're speaking about is being clever about where and how the company is structured and putting the right business functions and the right business units in the most appropriate environment.
Yes, and there'll be competing interests on that. You won't be able to say Ireland is best for all those things, or Spain, indeed, is best for all of those things. But certainly in terms of where you're headquartered is different to where you're operating. And from a legal perspective, it is much harder to switch headquarters the more mature that you become.
Does that lend itself then to a quite decentralized corporate structure by its very nature? Is that something that Shire would say is its strategy?
Yeah, I think that's the rule of the game rather than the exception. Today already, certainly for the future as well. I think if you look at the mid-size and the large pharma and biopharma companies, all of them are highly decentralized, very globally based, depending on different sets of reasons and considerations. Certain operational unit will be put in certain parts of the world, and that's the way it is today, and it's the way it's going to be in the future. Again, just coming back to one point I made earlier, I just want to make sure that I've not misled anybody, is the fact that when I say that there's going to be government-backed type of biotech growth, I'm more thinking about the way the biotech industry actually grows. The biotech industry grows because of new technology, okay? And I would say majority of the new technology come from academic research. If you look at the start of the biotech and where the biotech centers actually grew in Cambridge, Boston area, in Bay Area, in San Francisco. So in those two locations, that's because of Stanford and UC Berkeley, and it's because of MIT and Harvard. The same thing for Cambridge here as a biotech center, and in the Munich area. So what I was talking about earlier is that, I mean, you do need to begin to think about that network and the ability for the government through academic research to build up certain technology invention, because it's more likely that the industry is going to take the local invention rather than go far away to get a new invention, and also because of the knowledge transfers are a lot easier locally. So, for example, if you look at a Spanish strategy to build a biotech center, I think majority of those companies will actually be small companies, startup companies that will be locally based, probably with local technology transfer from academia. If you begin to look at the strategy of building a country biotech industry through attracting mid and large-sized company, then you have to really think about based on what type of attraction that you can actually bring, what kind of units of the global decentralized pharmaceutical company to come to your place, right? Because I totally agree, with what was said earlier, that different reasons will be used for different decisions on certain part of the expansion of a decentralized company to be based where in the future.
We've heard a few times already about the growth of small companies and their impact. It sounds from what you're saying like the first step to creating a biotech cluster is to grow small indigenous companies that can then perhaps act as a magnet for bigger companies that could partner with them. What would you say is crucial in getting those small companies to succeed in order to then be able to attract big international partners?
Mm-hmm. First of all, I think that there should be a solid basic science locally. And the second part is to have access to small capital. And that's it. Small capital is really hard. And the strategy has to be aligned with what the demand is, what the global demand is. So you will need to delocalize assets, any kind of assets, in order to be efficient, in order to be IP compliant with the reality of each country or each territory, and et cetera, et cetera. So, but certainly, I completely agree with the concept of taking care of very, very, very small companies. It's a matter of taking care of uncertainty management. That's the key. I mean, big companies, medium-sized, and even big companies cannot afford to manage uncertainty. They say that they are good at risk management, but that's not exactly the same as uncertainty management, and that's the key. And perhaps in the very, very, very small startup or spin-off company or whatever, they're going to die. I mean, in a short period of time. I mean, they have it already embedded into the business model. I mean, perhaps the opportunity. Perhaps not always the opportunity is linked to time. It's always tied to a period of time. So that's the key thing that some of the seasoned managers or more traditional managers cannot fully understand. That perhaps a small biotech is going to live for just a couple of years, and that's it. And that's the business, and that's it. And let's move on to another business. So. Basically, when a good government is fostering science and is fostering the cluster as a way to create wealth, after all, that's the overall objective of governments, they should take care of the small science locally, and then attract small capital, and that's it. And that's the machinery will work on an autonomous way.